big names from your clients. So, what's the conversation been like this week? If there's any one or two key questions, what have they been and what's your answer been?
Well, which of these stocks is most dislocated, and which stock has the biggest, most interesting catalyst up ahead of it? Those are the two biggest questions. I continue to like all three of these names. I don't want to be overly bullish, and I look to see which is most dislocated. In my mind, that's probably Amazon, and then Google. Meta had phenomenal results. Stock traded up. There's really nothing to worry about there, which means that it's probably less interesting, compelling as along. Where with Amazon, there was a fair amount of debate, like what happened to our margin expansion and why were retail sales a little bit soft and why didn't advertising revenue come through as strong as we thought it would. So you had these lingering concerns, which I think sets the stock up. I think the overall fundamentals for Amazon remain very much intact. I think AWS and cloud revenue is going to accelerate. I think advertising revenue is going to start picking up in the back half of the year as they start really lighting up that Prime Video. And I think the retail margins are going to continue to come through. There's just this is a scale game, and they're growing, 3 times faster than retail. Those margins will continue to rise. So Amazon, of those three, would be probably our top pick.
That's where it's down about 17.5% from the July high. But there was concern about the quarter, and a lot of people saying, come on, guys, really, the Olympics is why people were spending a bit less and things of that nature. Did you buy some of their explanation?
Not the Olympics. I wouldn't buy that. What I would buy is that the consumer's gotten a little soft. Look, we also just went through probably the best read I have into the consumer is online travel, and I cover 400 billion of online travel spend if I look at Booking, Expedia, and Airbnb. And July, consumer got soft. The question is whether this is a temporary summer storm or whether we're going into a hurricane. Our guess is that it's more the first than the latter. If that's true, then as the consumer kind of rebuilds his and her confidence a little bit, you want to stick with these names. There's definitely cyclical exposure with these names, but it's not like there was any sort of material downtick in consumer softness from Amazon's perspective. The consumer for Amazon has been somewhat soft for about a year. I don't think things are going to get materially worse. In that case, you want to buy this kind of correction on a name like Amazon. And in Google, real quickly, you got a product cycle here. I think people underappreciate how much better their search product is. Now, the big headwind you've got here is the DOJ, but assuming that doesn't turn dramatically negative for.
Like the S&P 500 and all other Magnificent Seven, Amazon sold off during the last weeks and saw a decline from $200 at the beginning of July to $150 at the beginning of August. Was the accelerated sell-off from last week a good entry point for long-term investors? The gap that occurred on August 5th was definitely a spot to put on a small position. In order to buy even more shares of Amazon, the $150 area has to be retested and hold, or the stock has to go sideways from here and stabilize. Hopefully, we see some inside candles for the next week with higher lows, which would indicate that buyers are slowly stepping up. If we believe the EPS numbers from FactSet, at Friday's stock price of roughly $167, Amazon trades at a 2025 PE of 28.4 and a 2026 PE of 22.47. At an assumed EPS growth rate of over 20%, this sounds like a very good price to pick up some shares to hold for the long run.